Joining me now is David Busch. He is the Co-Chief Investment Officer at Trajan Wealth. David, welcome.
Good morning. Thank you for having me.
So beginning with rising tensions in the Middle East, how are you thinking about the potential impact on global oil markets and what it might mean for investors?
Yeah, we're seeing the impact right now with both West Texas Intermediate and Brent crude oil prices jumping. Brent crude's right around $90 a barrel, and West Texas Intermediate has jumped to close to 87 the last time I checked. And so what's happening is this is adding to the inflation concerns that have been spilling over across the globe, specifically in the U.S. markets. And really what this leads to is there really is no catalyst for the Federal Reserve to cut rates because inflation pressures are going to remain higher. And it's likely going to slow the economy a bit.
All right, and beyond oil, how do you see the Middle East situation affecting the broader global markets and sector performance here in the United States?
Yeah, I think the opportunities that we've seen are in the oil and gas producers and refiners. They're going to be a major beneficiary of this, specifically in the North American markets. But also, if we zoom out even further, defense contractors are performing well. A lot of defensive sectors, utilities, and so on are performing well. Those that are getting that are lagging are those that are more rate sensitive, and those that are where there's still concerns about the rising AI concerns.
All right, and domestically, we're seeing growth cool while inflation continues to remain stubborn. What, in your opinion, are the main drivers of these trends?
Of the inflation is really driven by a couple things. One is, and we saw in the numbers today, is that the U.S. consumer is still spending. Retail sales were better than expected this morning, but also we have the impact of tariffs and the impact of rising energy costs that are permeating the economy right now. So that's going to keep at least the headline inflation higher, as well as potentially core inflation.
All right, and we're still a couple of weeks away from the next Fed meeting and rate decision. How are you thinking about the central bank's approach right now?
Yeah, it's very unlikely that we will get any rate cuts, potentially even for the remainder of this year. Right now, the market is not pricing in any cuts for 2026. So what we're looking for is a hawkish tone from the Fed, meaning that they're going to say that inflation is persistent, and so as a result, rates are going to remain higher for longer.
All right, and stepping back from this month's meeting, how are you thinking about the Fed's overall path for 2026? I know you mentioned you didn't foresee any rate cuts. Why don't you think so?
Well, when the Fed looks at economic numbers, they're looking at core inflation and the unemployment rate. Well, core inflation is still higher than the 2% target, and the unemployment rate, even though it ticked up from 4.3 to 4.4, is still at historic lows. And so unless there's a major catalyst, a continued softening of the labor markets, the Fed really doesn't have a reason to cut unless there's a major event that causes the labor markets for the unemployment rate to shift higher.
All right, and what is your takeaway from today's job numbers that came out? They were expecting 50,000 jobs, and obviously we saw jobs eliminated. What is your takeaway?
Yeah, the jobs numbers have been hit or miss, and I think a lot of it has to do with the way that they survey. But having said that, we're seeing it in the news headlines that there is a softening of the labor market, and so last month's jobs report just was a surprise, and so now we're sort of getting back on trend, is what it appears to me.
All right, and with markets showing a bit more of a risk-off tone, how are you advising investors to think about positioning in today's environments?
Yeah, the way that I'm thinking about it is really in three different ways. So one is, I think that large cap tech is still the wave of the future, and so I still want to maintain some exposure there. But also we've seen that broadening of the markets, and we've seen those defensive sectors that have performed well. And so it's really balancing that tech, large cap tech versus, or coupled with large cap value, dividend payers, and even getting down in the middle markets. And then the other thing that I'm thinking about is bonds, because bonds have historically been a good volatility dampener, and yields, if they're going to remain higher for longer, there's still opportunity for investors to invest in the fixed income side of the market.
And David, any under the radar storylines in our last 30 seconds that you think we might be hearing about in the coming weeks or months?
Yeah, a couple things that I'm most concerned with is the health of the consumer. We have rising delinquencies and defaults on personal loans, credit cards, and so on. And so that's going to continue to rise. And my concern is that the consumer is going to pull back from spending. And as a result, more defensive retailers or lower cost retailers, lower cost food suppliers are going to benefit, in my mind, versus kind of the higher end retailers.
All right, David Busch, Co-Chief Investment Officer at Trajan Wealth. Thank you for joining us.
Thank you so much.